Welcome to Sakshi TV. I'm your host Venky with my show, The Fun Factor. This show is on every Friday evening, 6:30 p.m. Eastern Time in New Jersey, and early morning Saturday in India. And on the Fun Factor show, every week I bring you conversations related to finances, related to savings, related to taxes, related to will and trust, related to insurance, and everything that has anything to do with your funds. So that's why the show is called Fun Factor. And as always, today on the show, we have an expert who's sitting with us, who's already been on our show once earlier, and he's back today with some more advice and knowledge and guidance for us. Let's welcome Mr. VR Chinni to the show. Welcome to the show, Chinni.
Namaste, Venky. Thank you.
Thank you. Thanks for joining. So for those people who don't know you, I'm sure there are so many people who already know you, but I'll just give a brief introduction. Chinni is a financial coach and educator, and he's a licensed financial planning expert, helping families and small businesses with strategies that meet their financial goals. In fact, if they don't have financial goals also, he has strategies for that. So Chinni holds an investment company since 2009, and he invests into various industry sectors. Chinni also acts as a strategic advisor for multiple startup initiatives. Every week, Chinni hosts an educational webinar on various financial topics that are helpful to families and small businesses. So far, Chinni has hosted about 150 or more webinars, Chinni, and educated over 5,000 families. Wow. So yeah, that's Chinni for you. And he's also very well known in the community with Save a Life IYC and Save Your Life campaigns. Chinni's team is now working on a campaign on blood plasma for COVID-19 patients. Kudos to that. That's a great initiative. So welcome to the show, Chinni. Thank you so much for taking time to be with us today on the Fun Factor.
Thank you, Venky. Thank you so much. Really appreciate, Sakshi TV for inviting me back to have a little bit more conversation on, these topics. Really appreciate that. I mean, that tells me that I think Sakshi TV and, and all the audiences of Sakshi TV, I think, like my my sharings. Yeah, thank you so much. Thank you so much for that.
Yep.
And I really appreciate that for having me here. Since you mentioned that, the plasma donation for COVID-19 patients, with respect to what is really happening in this country, I mean, not only this country, across the globe. So we are working on a campaign for plasma donation so that, that we can actually help treat, COVID-19 patients. So if any medical professionals out there, we need your help as a medical professional advice. So if you're, watching this TV show, please, contact Sakshi TV so that can actually connect to me, or I'm going to be sharing my contacts. So please, talk to us. We need your advice on these medical practices. So how we can actually help COVID-19 patients by using a plasma donation. Thank you.
Thank you. Thank you. That's a great service that you're doing, Chinni. It's phenomenal. It's the need of the hour right now. So, more power to that and that effort that you're putting in. So coming to insurance, today we are going to be, so the last time you were on the show last month, we were talking more about will and trust and estate planning. Today we are going to be speaking more about insurance by itself. So, and insurance, like all of us know, and some of us don't, insurance is an absolute necessity, an essential thing to every individual and each and every family. That's not only here in America, but in India also. But there are a lot of people who still think insurance can wait. Now, tell us, I think I want to start from the most basic, rudimentary. Who should take insurance? What is the age group? What is the demographic? Let's start from there, please.
Sure, definitely. I think you touched a really good point about the insurance to talk about as basics. when you're really talking about, especially when you're talking about the United States of America, we're all around the insurance. You talk about anything, it's an insurance. You touch about anything, it's insurance. Maybe back home when we came to this country about 15, 20 years ago, it's not much about we kind of aware of this so-called insurance concept. But in this country, everything is insurance. But let's talk about a little bit about the insurance before we get on to life insurance. Okay, so insurance, right? There are some insurance aspects in our daily living lives that we talk about. Let's say, for example, in the United States, everyone kind of enforced to have an automobile vehicle. With car, right? If you have a car, you have to have auto insurance, right? Can you really drive a car without auto insurance? Maybe not, right? So it. That's required. That's compulsory. And if you own a house, you need to have a home insurance, right? That's compulsory too. If you don't have a home insurance, the insurer may not actually close your house, right? So that's two things.
As a matter of fact,
and
if
also,
you're renting also,
true.
you need to have renter's insurance, and they won't rent you an apartment unless you take your renter's insurance, correct?
Absolutely, yeah. And some part of the, for that line, I just don't want to give you a kind of one-liner. Yeah, some parts in the country, yeah, that's an optional. So you don't have to have a renter's insurance in order for you to rent an apartment or, but in some states, some cities, yeah, it is very well required. It is a must. So it depends. But home insurance is really required. And the third one is, the really required one is the health insurance, right? It is, that, right? You have to have health insurance. But luckily, if you're working for a company, then, luckily you get, health insurance with a subsidized, contribution. But it is a must, right? So these are the insurance, in the world that everything you talk about having an insurance is very an instrumental part in our lives. But at the same time, there are some optional insurance concepts. That is, one of them is life insurance. And this is what we are talking about, right, Venky? Yeah, so to answer your question is, life insurance, what is this all about, right? If we are talking about, for example, auto insurance, yeah, if something happens, or if I hit any car, or if somebody hits me, then, whatever the damages are covered by auto insurance. Right. What is life insurance? If you're a family, and if you have children, and you have a kind of a good number of responsibilities, then you are the kind of a person that, taking care of all those responsibilities. Then what happens? Imagine what happens if you are not there. What happens that who is going to take care of your children, and who is going to take care of all your responsibilities? For example, you own a house, you have a 30-year mortgage or a 15-year mortgage, right? So who is going to take care of those, those responsibilities? So for that factor, the insurance concept, life insurance concepts kind of came in about 1960s or 70s. That's where the actual concept actually been in place for commercial, or not commercial, consumer usage. Don't take me on those 1970s or 80s, around that time. So it actually been into the consumer thing. So if something happens to the breadwinner, I think, yeah, it is important for you to have a, life insurance. That means if something happens to the person, if the person is gone, then the remaining family or the beneficiaries will get a good amount of money that is enough to lead the life for the remaining family. So now, Venky, you're saying, okay, who should actually
exactly
have it?
Yeah, that's my question. So basically, if I was advised when I came to America newly back in 1998, 2000, about 22 years back, right? I was not married, I was single. But if somebody had told me, hey, in your late 20s or early 30s, if you sign up for the life insurance, the premium is so low because you're young, you're healthy, and you'll be in a kind of a preferred category. So your monthly premiums that you pay into the insurance is so low. So take it now. Then at the end of 20 years, if you kept paying for 20 years, after 20 years, there are policies where the policy would have built up enough, cash value. You can draw against it. You can take loans against it. It will come back to help you at a time when you're 50, right? So somebody had told me that, I would have definitely taken it back then. And then maybe life changes. I get married, then I have children, and I keep adding more, family members into the policy, cover all of them. I can change my beneficiary. So before I was married, I would have put a sibling as a beneficiary. I would have put probably a parent as a beneficiary in case something were to happen to me. They get the benefits. But after marriage, I can make my spouse a beneficiary. I can change the beneficiary, or I can make a child. So all of those things nobody knows. I didn't know back then. Nobody told me. And the single people today also are not even aware of that. Am I right in saying what I'm saying?
That is true. Yeah. So when you're really talking about, that is absolutely right, Venky. So if you are a single and if you don't have a family and you think, why do I need life insurance? The first and foremost thing that comes into picture, right? But, who should actually have, when you're really talking about, if you are a single, yes, you need to have a life insurance. If you are just married, yes, you need to have a life insurance. If you are married and you have a child or one or two children, yes, you need to have a life insurance. And if you are married and you own a house, yes, you need life insurance. If you are married, have children, and have a house, yes, you need to have a life insurance. And some says, well, I'm an H1 visa. I don't know how long I'm going to be here, but do I really need life insurance? Right. So that's one other question. Yes, you need to have. But out of all these things, what the bottom line comes into picture is, do I really need life insurance? Yes, I understand. Anyone actually kind of have a responsibility, right? For singles, let's go one by one. For singles, let's say I'm single. I don't have anything. So I don't have any family. Do I need to have a life insurance? Yes, you do. If you're looking at a responsibility of, if you are not there, you are a single person. That means you have parents back home. Then if something happens to you, and then you have a responsibility of taking care of your parents, who's going to take care of them? So that's where, even though you are a single person, if you have a real obligations or responsibilities, yes, one should actually have a life insurance. And the other things people kind of talking about the other way around, well, why should I actually have a life insurance? Okay, this is the definition for you to have it. Let's say if you're a family and then you need to kind of go around leading the remaining family, for example, $1 million. If you have $1 million in cash, a liquid cash, then if your responsibilities are equal to $1 million, then you don't need life insurance, period. We're not talking that about everyone should have a life insurance. Who should have a life insurance? So there is a kind of a formula. There are some how much obligations, responsibilities you have, and how are you actually having these things. Okay, here is the thing I wanted to tell. People say, oh, I have this property, that property, this money, it's in there. No. So liquid cash. If you think you have a $1 million plus liquid cash in hand, you don't need life insurance.
Gotcha.
So that's a very, 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 very simple, the thing. And then like we're talking about, before we get into the types, I know you mentioned that, the type of, cash value, the type, and then, you accumulate all that stuff that comes under before we talk about types of life insurance concepts. And then let me actually stress one more on that. See, if you don't have a life insurance, see what is happening these days. The GoFundMe, we see GoFundMe here and there. So for example, we don't know, right? It could be for a health reason that person is passed away, or it could be some accidental situation. We don't know. But irrespective of that, we are seeing every day or every other day, young families losing the parent or parents. Then what is about their situation, remaining family situation? And then their friends or family members are no disrespect to anything. This is all about what we are sharing is, it's an information only for informational purposes. We're only sharing that, how can you actually plan so that your beneficiaries or your remaining family is better off, at least in terms of finances. That's all we're talking about. So see, what are we seeing? GoFundMe. Hey, something happened. This family needs $200,000, $100,000, $50,000. Even for $50,000 to $100,000 or $200,000, we are going on a GoFundMe. Thanks to GoFundMe, creating a greater vehicle for families and people who are in need. But this situation it's all about a planning. We can limit so much of these things by having a very, very minimal proper planning. Like, for example, if you were to take a small insurance coverage, it won't cost too much. I'm going to get onto those details. It won't cost you a fortune. But with this little money, you can actually insure for $500,000, $1 million. Amazing. So if something were to happen to that person, the remaining family will get $1 million in cash. You don't need a GoFundMe for $100,000, $200,000.
Yeah.
So see what the importance of, Yeah, go ahead, Venky. Yeah,
with GoFundMe campaigns, I get requests almost 2 times a week of late, where it's a young family, in the late 30s or early 40s, and the man left a family with a very young wife and maybe infants or toddler kids, and they have no savings. They're starting out in their life, no savings, and all of a sudden, boom, the main breadwinner is gone, and they are now coming with their arms open, asking friends and relatives and extended circle to give them some money to go by. Why put a family in that kind of a situation when you can help it? While we are able to, all it takes is, even if the premium is it'll not be more than $100, like you said, for $500,000, or maybe $150 or $200. How much? What is that in a month? If you forego one time going out for a drink and dinner with 4 friends, you're saving $60, $70, $100 easily, right, in America. So this can go towards protecting your family and not putting them through the ignominy of having to go to GoFundMe and try to collect money from other people. Some people might donate wholeheartedly, but why should we go to everybody every time? I see GoFundMe campaigns almost 2 times a week, and it breaks my heart when I see that.
Yeah, true, Venky. This is absolutely, a thing that we can prevent by having a proper plan. Some of those things we cannot, prevent or control. For example, COVID-19. See what happened. We are going through this process. We're trying to get hold of this virus so that we can have go back to the normal lives, right? But these things, for example, planning is in your hands. This is your family, your own family. It's your own child. It's your own children. Yeah, this is you. You have to plan yourself. Nobody's going to come in and tell you hey, this is what, or help you. At least some people actually tell. That's what Sakshi TV has been trying to help you, right? Trying to give you information. So I'm going to be challenging a situation, Venky, on behalf of you. If any of you viewers are still kind of thinking that no, I don't need insurance, life insurance. No, this is not the way. Please call us. Please call us. Share with us. Challenge me. I've been into this industry for a good amount of time. I think I am confident that who should have life insurance, who shouldn't need a life insurance, why you should need a life insurance, how much life insurance you need it. Please challenge me. On behalf of Venky, I'm actually getting onto the toes. Please, please call us and share the knowledge. Share what you guys think. But
it's absolutely important, and I do echo Chinni's concern. Right, there are so many people who have an attitude that nothing will happen to me, and even if something were to happen to me, it doesn't matter. My dependents or not even my dependent. Let's say, let's talk about a young, late 20s kind of individual whose parents are still working and still earning, and they're still paying mortgage, right? They probably started off late in life. They came to America with children who were in their teenage, let's say, and they're still building their portfolio. They don't have enough wealth. The son is now finished college and started working and having a great time in life, right? Why not think about those parents? Yeah, you're single, that's fine, but think about those parents if anything were to happen, at least they can get, support. They can get $500,000 or $1 million, so they don't have to worry about, the mortgage anymore, or they don't have to worry about their retirement anymore. So think about both sides, not just about, one side of the equation. Think about both sides of the equation, and I think it'll make sense. And at that point, $100 a month is not going to look too big for you, right?
Right. Yeah, definitely. I think you kind of got one more point for me, Venky. The culture. People
Yes.
don't want to talk about this, right? Yeah, we have a great and rich culture, no doubt about it, right? But this is absolutely awesome. So, but for some reason, our culture, stops it stops us to talk about life insurance. Why? Because it's to do with the death. That is why, no, don't talk about these things. Nothing is going to happen to us. We're happy, we're cool. I mean, we're so say we are so good people, and nothing happened to, I'm just kind of making around the whole, the scenario is into one bubble, right? But remember this one. Okay, if any of your viewers, Venky, they can actually answer this question. What is the happiest country in the world? That's you can actually say same thing to all the viewers. See if anybody can actually call it. Please, well, we don't have any control. You can use Google, but if you don't want to use Google, and then please call us. Yeah, please call us. What is the happiest country in the world? Then we'll talk about that. Okay, the culture, right? And then the other thing is, I think we mentioned, right, H1B visa holders. It doesn't matter whether you are on a visa, green card, or US citizenship. Life insurance is life insurance, responsibility is responsibility, right? That's nothing is going to change. But the thing is, well, I don't know whether I'm going to go, here or there, not, right? But you have options. But so you can actually, there are some insurance concepts that you don't have to worry about it. It's like auto insurance. You pay for it, you have the coverage. You don't pay, you don't have the coverage. That means as long as you live in this country, you have the coverage. You have a $1 million coverage. The minute that you have to go back to India, then disconnect it, like you disconnected your auto insurance, like you disconnected your home insurance. Disconnect life insurance too. Nobody's going to ask you. Nobody's going to say anything, right? So I'm going to get to that. I'm saying, for those visa holders who are having a living legal status, not the visitors, living legal status in the United States, should consider having a coverage for your own life. Okay, that's one thing. I don't know anybody's going to call us, for those two things, challenging us to having a life insurance, and also what is the the happiest country in the world. Okay, so that's that thing, Venky. And now moving on to this thing, before I actually go into that, the types of life insurance. It is its own world. Let me tell you that. If you are in the technology, how huge is the technology industry, right? There are mainframes, there are this and that, Python, Cython, whatever there's so many things. If you are in the legal industry, what is actually immigration, non-immigration, criminal, all that stuff. If you are a medical professional, all those things, right? Same thing here too. It's not simple. It's involved. I wouldn't say it's a complicated. It's involved industry. That means you need to know who you actually helping, who you actually taking the help from, and how much experience they have, what kind of a trust factor or the experience or all that stuff what you have. This is very important for you to choose an individual as a professional. Okay, that's where you actually get the best out of it, and that suits for your family. Okay, that's another factor, right? So now we got talking about how much. Okay, we got it, we got you. And how much life insurance do I need it? That's a second question, kind of comes into picture. Having a life insurance of $50,000 is a yes. And having a life insurance of $2 million is also yes. So when someone asks you, hey, do you have a life insurance? Yes, I have. Then you say, oh, okay, you have it. But you know what? You only have a $50,000. But that may not be enough for your obligations and responsibilities.
In today's day and age, 50,000 won't be enough.
Yes, yeah. So that's where it is very important to weigh in how much life insurance you need as a family. It doesn't mean that, okay, your close friend has $750,000 as a life insurance. It doesn't mean that you also wanted to have a $750,000. because he has only one child. He don't have a house yet, but now you have 3 children and you have a big house. Let's put it that way. I'm just giving you an example of how you weigh it, but you both are super duper close friends. So that's what I'm trying to say. So you need to weigh in yourself, how much responsibilities you have, how much obligations you have, and what is the future in the future that is actually you're foreseeing, with your children, their college education and everything. So this is the one that you wanted to come up with and see how much life insurance you should really have. So that's called how much.
So Chinni, basically, within life insurance, there are different types of policies and different types of riders you can attach to the policy. So just for the sake of people who have absolutely no clue, right? One is there is whole life that you can take that will cover you up to 100 years or 99 or 100 years. And then there is a term life, which is limited. It can cover you for up to 10 years or 20 years, and that's it. So that is one part. And the second part that people do need to understand is life insurance can also take care of, your retirement, if there is a disability at some point in time when you're 60 years or 65 or whatever. If you develop some sort of disability and you cannot go to work, there are policies that cover you for that also.
Yes, Venky. Yeah, it's see, this industry is, like I was saying, is so involved. It has evolved so much. When it started with term insurance, that means it only covers as a term, like a 10 years, 20 years. If you're a 35-year-old and you want to cover your life until you retire, like a 65, that means something happens while I'm working. I don't want to actually put my family in a financial crisis situation. So, but if I'm retired, then by the time I should have my own plan and you should have my own goals, so that I should have built my wealth for the remaining life, right? So that is where the concept actually started with having a term insurance. Okay, that's that. So so for example, let's talk about these things. A term of for 20 years. That means you have a $1 million term insurance. For 1 year, it's a plain vanilla. Life insurance is a benefit that you get only after you are gone. That is a basic definition of life insurance. There are so many people think about different definitions. They think investment, they think retirement, they think this and that. Please understand. And this is an absolute appreciation goes to Sakshi TV. And it's an opportunity for you all to have a clear idea of what is life insurance is. I'm going to come into the Venky. All those things you said is absolutely right there, right today. But I'm coming from the basics of what it is. Life insurance is that. So let's say you have a 20 years, a $1 million life insurance. What does that mean? If something were to happen to that individual within this 20 years of time, the remaining family as a beneficiaries, they will get $1 million proceedings. That's the kind of understanding. Then what if nothing happens within this 20 years? So on the 21st year, whatever the $1 million coverage is gone. Even though you are at a 63-year-old or 65-year-old at the time of 20 years, then the coverage is gone. And second thing, what is actually happens is all the money that you have paid for 20 years or 30 years is gone. But it's a small dollar amount anyways, every month. But that's the nature of it's kind of covering only risk factor. Okay, what if something happens to me? Then who is going to take care of my family? It's only covering the risk factor. That is where the 1970s, around that time, term insurance being introduced for consumer purposes in the United States. As they actually kind of evolve, they learn. For example, evolving is always happens, and also we learn from things, right, Venky? For example, I'm not an iPhone user. I'm just saying. So let's say iPhone 5, and then it was working okay, right? But eventually iPhone 6 came in after maybe 2 years. Then again 7, then 8, 9. So what's wrong with iPhone 5? Nothing. It still works, right? Only thing is they are added faster, bigger screen, flashy screen, more features, things like. So same exact thing in here, life insurance too. Life insurance started with a vanilla death benefit. Simple. Then after about 10 to 15 years, then they've thought about it. Well, I mean, this is only giving you a 20-year, 30-year term. I mean, no, I'm not having a coverage for lifetime. What is this? I don't, whatever the money I paid is also gone. That doesn't really, give. That's where when, this is a terminology thing, Venky. I'm also kind of pointing this out so that all our, viewers are aware of this. It's called a permanent life insurance, not whole life. It's called permanent life insurance. What does that mean? Permanently for your life. It's a term and permanent. That's a permanent. That means you are going to have a coverage for lifetime, however long you live. Well, there is a condition to it, right? I mean, like usually what we say is 100 years. The human's average life expectancy is 100 years. Yeah, it will cover for 100 years. But the things are, it'll be surprising to you, maybe not to you, Venky, but for some of the viewers, the statistics says the average human's life expectancy is, I don't know, anybody can guess, 120 years.
Whoa.
So yeah, you be ready, you're going to live longer. If you live longer, you need more money. So I don't know. So and I'm going to give you one more not shocking, I don't know, I don't want to say shocking, it's a good thing, right? So after this 2020 census, maybe you are going to get the good numbers, and that's where that industry is talking about. It could extend to 130 years. So life expectancy is going and growing. So it's kind of a good and bad. You may laugh at it. Oh no, I don't want to live that long. But what do you have in control? Nothing. Right? So you got to lead. You got to lead. However long you want it to lead, right? You need to lead. In other words, so you got to be ready for what if I live longer? Do I have enough money? Do I have enough retirement income or money? Or whoa, that means I'm going to end up working more number of years. I will leave that to the next session, Venky. So let's actually get back to the insurance kinds. So now we have a term and we have a permanent.
Right.
Okay, with this permanent, when the companies actually started offering solutions, they've introduced a flavor. I usually say flavor, but not be a right word. But it's called a whole life insurance. So one of the kinds or types of permanent insurance is a whole life insurance. Whole life insurance, not a whole life insurance. That's what I wanted to really give the basic understandings of what the life insurance is all about. So now, okay, we'll finish that types of these things, Venky. Then we can go back and then put more questions to it. So then after whole life insurance, what happened? So again, same. Every day we are learning. Every year we are learning. So after maybe about 5 or 10 years later, they've introduced one more. The market introduced one more kind called universal life under permanent life insurance category. So now permanent insurance, you have a whole life, the one version which has been introduced about 1980s, and then you have a latest version called universal life. And obviously, this is not the time for us to explain what is the difference, what not, everything. But yeah, if you were wanting to know more details, you can call our office. We can definitely give you more details about that. So now what happened? Universal life. Then after for about 5 to 10 years later, they have introduced a variable universal life. So that's one another kind. Again, learning things. What is a trend that is happening in the industry? How can the life protection policy members can actually leverage maximum or optimize their vehicle? There are so many bullets, variables, right? Then after 10 years later, they have introduced, it's called indexed universal life. It's called IUL. That is also again under permanent life insurance category. So you have a term is term, simple, clean, clear, and then permanent. Under permanent, you have a whole life, you have a universal life, variable universal life, indexed universal life. If you ask me what is the latest and greatest that is happening in the world, is indexed universal life. All are working. There is nothing wrong. iPhone 5 is working, 6 is working, 7 is working. There is nothing wrong with it. what you want is your taste, is your need. Actually, for the phone, it is a taste, right? But for this one, it is your need. So that's what I really wanted to stress on that, Venky.
Okay. All right. So, Chinni, a simple question that has just come up for me is, somebody says if they have taken, let's say, a 20-year term insurance, and around the 15th year or 16th year, they're saying, oh, there's only 4 more years left, and I'd like to extend it. Can I convert it into a permanent life insurance, or what happens to all the premiums that I've paid so far? Do I have to let it go and take a brand new permanent life insurance?
Yeah, that's very good question. Yeah, so now you have a term insurance, which is for 20 years, and 15 years already kind of been over. You have a 5 more or 4 whatever years left, right? Yeah, you have a couple of options to convert it. Yes, you can convert that. It depends. Again, there are so many companies, right? Depends on the companies what they offer. Yes, you may have an option of converting that into a permanent life insurance. That's one thing. The one advantage of the converting is we're not going to get the whole advantage of it. One advantage is your health is kind of whatever. Let's say 15 years ago you were super duper healthy, and then in this journey of 15 years, we're all humans, right? So you develop some kind of health condition. So when at the time of the conversion, the company actually helps you convert. But the thing is, what they do is, now you are 15-year-old, right? Like, let's say when you take it at 30, now you're a 45-year-old. They will assess you as a person with a 45-year-old when it's converted. The premium setting I'm talking about. When you are a 45-year-old, but you have some health condition as of today, because you have had this insurance 15 years ago, and that time your health was great. So we're going to consider that health for you today. That's your advantage of having a life insurance very early stages. So what's happening here, in general, if a 45-year-old goes and asks for a life insurance, so age and then the health condition, right? Now your health is not that great. But in this example, you had a better health 15 years ago. So they're going to take that combination of these two. 45-year-old, the bestest health. And with that combination, they will set a premium amount for you. And the other question that you asked is, what about all the monies that are paid? Yeah, they're gone. They are term insurance, right? Yeah, you cannot get them back, but they are gone. From this point onwards, you may accumulate some money.
But that's okay. It's just like paying car insurance. If you didn't use the insurance, that insurance doesn't come back to you. So it's just a protection. And again, we're not talking, thousands of dollars. We're talking in the low hundreds. Basically, if you're young and healthy, and it's not way too much more than what you would typically spend in a weekend going out to a bar and drinking, and going out to a restaurant and eating with a few friends. So that's the amount you're going to invest in yourself and people who can live with dignity if something were to happen to you.
Correct. Yeah.
Beautiful.
Absolutely.
So
that's
now,
actually really.
Yeah, Chinni, the next thing is, again, for people who may have joined us late, this is Venky. You're on Fun Factor on Sakshi TV, and we are talking to VR Chinni, who's a financial coach, educator, and a licensed financial planning expert. We are talking life insurance and various other things around the insurance concepts. So, Chinni, I want to take a small segue out of life insurance, but then we'll come back to it. I want to talk about college savings for children, right? And then retirement, and some sort of disability. All of these things, people don't have a complete understanding of those. But as a licensed life insurance agent, you can also help them with all of those other things as well, correct?
Yes, I do help with any financial aspect for a typical family requires, and all those things that you have mentioned, Venky. Yes, we can help with the families with those needs. Yes.
Right. So now we'll just address them one by one. So I want to start with college savings for your children.
Sure. Yeah, absolutely. So, well, this is, these are all topics are pretty, I'm so passionate about talking those things. You can see my expressions,
Yeah, I can see the excitement.
it kind of blows me out. Wow, really? Okay, let's talk about it, Yeah, because these are all a concept, but, concepts are nothing if you don't put them into process, So we can share, but it's you, viewers, it's you, how much you take, how much you get, how much you really, 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 really wanted to adopt for your own family. Procrastination is always there. You watch our show today, and then tomorrow you get something else. You kind of, get into the track of the normal, and then it takes so much time for you. But you know what? The family is not going to wait for you. Things are not going to wait for you. For example, college education, Venky. You are a child. You have a child, a little baby, just born, 1 year, 2 year, 3 year. And then the other day while I was talking about a family, and she was saying, I just kind of mentioned that, have you, then she said, oh, no, my child is still only 9-year-old child. She's thinking that she has a lot of time,
right,
in her mind here. But, the reality, in about 10 years or 9 years, she's going to go to college, or 8 years. But I'll give you that, the fun what you say, Venky, I'll give you one kind of a nugget for this evening, because, what we thought was, we're going to have a next time topic, if were to invite me again, thought of actually focusing on a college education, but I'll give you one nugget for this evening. So this is what you wanted to see. The statistics, it's not me, it's all about statistics, saying if the baby is born today, for parents, the baby is born today. Well, yeah, this is my, I kind of remember that, this is my, but I just want to say, well, on the paper, today is my birthday, on the paper.
So happy birthday on paper.
So yeah, it kind of comes in multiple directions, right? Yeah. So if the baby is born today, that means the parents of the baby has how many years for college? 18 years.
18 years.
18 years long. In 18 years, this baby is going to go to college, ready for college, right? That means the parents of the baby has 18 years. You know what? Then these enthusiastic family parents, they really, really wanted to kind of find out, wanted to plan so nicely because of the experience they have had. So they've actually went the so-called expert, then said, hey, we just have a, baby born. We just wanted to, kind of start saving for my, the baby's college education. The two questions: when should we start saving money for my baby's college? One thing. Second question is how much? Very simple. And the so-called expert mentioned, yeah, glad that, okay, congratulations, by the way, you have a baby. Congratulations. I know you have more responsibilities and of course more fun too, right? Absolutely. Family is fun. So now it says absolutely awesome. This is good. Now, you know what? The statistics saying you have to start saving money from today. The baby is born on today only. The statistics saying you have to start saving money from today, not tomorrow, today. Okay. Well, this is all awesome. Then, yeah. Oh, wow. This is great. That means we came, to, very, in a timely manner. Then what they is asking is, okay, how much? That's good. And one would think that, right? $10, $20, $30, maybe, to $100, right? The statistics saying again, $500 per month. The baby is born today. This is viewers. This is your benchmark for our next, or anytime. If you can wait for the next session, please, you can call us. We'll give you more details of that. So baby is born today, and the parents of the baby has 18 years old, and the parents of the baby has to start saving money from today, $500 per month. And that's kind of a benchmark, Venky, that I want to leave, at that topic for now. So that's kind of important. I think you brought a great point. That's one of those huge milestones for any typical family who have children, wanting them to go to college.
I know, especially I would think that 500 that you're saying is still a little on the lower side, because college costs are just in stratosphere at this point in time. And most, at least Indian American parents, one of the things they do is they push their children to go to Ivy League all the time. They want to go STEM, they want to go Ivy. Ivy League college costs are not exactly low. They're very, very expensive. Even at $500 a month, you're saving about $6,000 a year. And that is about 60 plus 40 is 45, $105,000 in 18 years.
Right.
That's probably 1 year's tuition in an Ivy League college.
Yeah.
True. I remember when we applied for my daughter last year, simple, not even the Harvards and the Princetons and the Yales of the world, even like the Northeastern and those kind of colleges, right? The second tier were like at 75,000. Even New York University was like $90,000. It is an Ivy League. New York was like $100,000. It's not going to be enough. You need 400,000 if they're doing a 4-year course, and at 500, you're only saving $105,000 in 18 years.
True, absolutely, Venky. But you know what? Because Sakshi has invited me to be, share this. I just want to be nice, little nice. so, I want to be on the, both sides, right? Yeah. So, yeah, you're true. That is reality. But what is the benchmark? See, that's what somewhere we have to start, right? That's kind of a benchmark on this. So, and you mentioned in coming back to the life insurance world, Venky, you mentioned that the benefits, right, like a retirement and all the kind of stuff. So those things will come with the permanent life insurance category, not the whole, not this thing, right? Permanent life insurance category. The term insurance don't have any factor. It only covers a risk. That's all. So you're not going to gain anything. You're not going to lose anything. You pay what you have the coverage for. Simple situation. But you know what? Before I actually get into this, the permanent life insurance, other kind of benefits, this is what the thing is. This is a new industry, not the new industry, it's been there, but I just want to share with you. So for those culture, rich families don't want to talk about death, right? That's where there's a good segment of people really out there. They don't want to talk about death, but they don't, see the value of life insurance. That's one another segment. There are lots of other segments, right? That's the reason I've actually mentioned, what is the happiest country in the world? But I did not get, but how to say it? It's Finland. Okay, that's one. It's Finland. Okay, so it's not about this thing, right? Why is the reason? Why it is so happy? I'm going to leave it to you. I'm not giving you an absolute 100%. I could be totally wrong. Maybe the concept is interested me on this. Why they are so happy? One of the reasons is because they think about death every day. There is extreme differences. Mm-hmm. Culture, families don't want to talk about death, even though that is inevitable. We got to go through it. You're born, you have to be gone. This is your journey. You have this much journey. This is where you have to do something. That is called a purpose of your life. That could be, again, a different session. Sorry. So you are born, you are gone. In between, that's your life journey. That is where you find the purpose of your own life, fulfill it before you are gone. So that's life, right? So, but why are we not able to talk about death? Because it's inevitable anyways. So the happiest countries in the world, if they talk about one of those things, and what I've learned is they talk about death every day. So when you're really talking about death every day, then that's not a scary thing anymore tomorrow for you, because it's okay. I'm talking about, I know what it is. If you're the more scary, the more, you are away from it, the more kind of, repulsion you get, right? That's the nature. So that is what I just wanted to kind of give you an understanding of why, how, art, all those things is that, the culture. That's okay. We have a very rich culture, but you need to kind of look into the real, the practical, right? That's one thing, right? And then I wanted to get into this. It doesn't matter whether it's a term insurance, it's a permanent life insurance. The industry actually has come up with some new concepts. It's called a living benefit. For those culture or not, the family, they heard about it. Companies hear, consumers, right? And then what they say is, hey, you know what? If you have a $1 million of a life insurance, in order for you to get a benefit from life insurance, you don't have to go away. While you are living, you can get some benefit from life insurance. That's called living benefit. Living benefit. While you are living, you'll get a benefit. That's called a living benefit. So those living benefits
definitely interest a lot of people who are watching.
Yeah. I know. Yeah, that gives you absolutely. Even when I learned about it, oh wow, really? I didn't know this. Really. I mean, I'm sure there are at least some families that kind of opens their vision or thought at least. That. Thank you, Venky. Thank you, Sakshi TV again. Having this a great share for the community, that what we love, what we live in. So yeah, that's the thing. So there are benefits. Please go and talk, open up, talk your needs, tell your needs. What do you want? What do you need? It's your family. Nobody's going to come and help you. You got to ask. The so-called, I don't know in other languages, Venky. In Telugu, you have says, even if the child is hungry, even the mama, the mother, unless the child has to ask, okay, I'm hungry, she may not actually feed it, right? But not in the other side. But
I'd like you to say that in Telugu. I want that saying in Telugu, please.
Oh, sure. Okay. Ammaina adagandi annam pettadu. Undi kada? Amma, right? మరి అమ్మ అన్నప్పుడు ఎప్పుడు పిల్లలకి ఎప్పుడు ఆకలి అవుతుంది ఎప్పుడు ఆకలి అవుతుందో తెలుసు. డెఫినెట్ గా ఇఫ్ ఇట్ ఈస్ గోయింగ్ బియాండ్ సెటన్, బట్ డెఫినెట్లీ ద మదర్, ద అల్టిమేట్ the parent bond, amazing mother bond is again another topic. So yeah, but you know what, but you are a child, you may be hungry before kind of she realizes. That means అందుకోసమే అన్నారు అమ్మైనా అడగనైందా అమ్మైనా అన్నం పెట్టదు. So that means you're coming back to this thing. This is your family, your children, your life. Not someone is going to come and then tell you, okay, have it or take it. No, they may tell you like Sakshi TV. They may tell you, you are a family. You have so many responsibilities.
So it looks like Chinni's video has frozen for a second. Hopefully he's back. There you go.
Oh, sorry. Oh, boy.
Yeah. Okay. So we missed the last portion of what you were saying, but we got the gist of it. So Chinni, we have just another 5-6 minutes left in our conversation. I want you to go back and touch upon the most salient features, the most important parts of life insurance that we need to leave our viewers with, and in case there are people that are interested, how do they contact you?
Yeah, sure. Let's talk about you mentioned one benefit, right? Retirement.
Yes.
Retirement benefit. If you plan for a permanent life insurance, in addition to having a $1 million coverage, in that example, you also being accumulating some cash in your account. It's called, in other words, cash value, or whatever you call it. Some cash is accumulating. So that accumulated money, whatever that money is, we don't know, right? However much you put, that money, if the money is accumulated, it's available, that money can be used for the retirement purposes. So there are so many, it's a family to family, the concept is there. The concept is, okay, I'll run through the concept very quickly. The biggest, largest advantage of having a life insurance, I'll tell you, viewers, this is what it is. If you're not aware of it, this is what it is. Almost all the benefits that you are going to get out of life insurance is a tax advantaged money. Please remember that. It's a lot of money. Let's say you have a $1 million death benefit of life insurance, even though it's called term insurance. Something unwanted happened, you can't help, nobody has any control. Then the remaining family now gets $1 million in cash. On that money, IRS says you don't have to pay an income tax. There is IRS code is there for life insurance, section. So that's what. So the same money, the same $1 million, you get it from other ways of stock markets or your 401k, your real estate rental, anything and everything you talk about, everything is a taxable money. Huge advantage. Okay, that's one thing. But you know what? You need to have a proper way of designing your own life insurance. And again, I'm not saying, okay, that's the reason, like Venky, you mentioned, right? Our basic understanding is having a life insurance. That is a foundation for you to have an importance of having it. Okay, yes, I wanted to have a life insurance for a lifetime. Good. Then is there anything that I can do so I can optimize my vehicle, which is tax advantage money? And the other one is living benefits, the medical benefits, like you're talking about. There is a long-term care you can add. There is a critical illness, chronic illness, terminal illness. There are so many, multiple ways of a medical benefits you can get. All these can be actually designed such that you don't pay any income tax. Okay, I'm not a CPA, but I can tell you a kind of a guidelines, and we can actually work through with your CPA and then you, and then all the kind of combination. So that's the second one, right, Venky? And and then the accumulated money, not only for retirement, Venky, that accumulated money, if you have enough money, whatever it is, you can use it for any purpose. There are no restrictions. And if you don't want to take anything, your life insurance will, let's say you actually have a $1 million death benefit, and then you accumulate, let's say you have $250,000 in cash, but you don't want to use that money. Now I have some other money to use it, right? Then you can leave that to your beneficiary. That means your beneficiary is going to get a $1 million plus $250,000. So they're going to get $1.25 million. So there's a greater flexibility. How do you know all these things? You need to open up yourself. You need to kind of come and then talk to the professionals and then learn about it. There are so many combinations out there, but you have to put time for your own family, not for someone else, right? That's one other thing. This thing, but I'll tell you this clue though. So for people who are actually looking at a different way of life insurance, so there is a school of a thought. There is a school of a thought. Every school of a thought is absolutely awesome. One say, well, I don't want to put money in permanent life insurance. I just take a term, and the remaining money I'll do investment. Please do it. Okay, that's one school of a thought. It's been there. It's out there. It's been happening. No doubts about, no questions about it. And the other thought of it saying, well, I don't know where to put money. I don't know how to make money. Wherever I put money in stock markets, I'm losing it. I don't know what to do. Then it may be something for you. Have a permanent. That means you go and have a permanent life insurance for life. And then you'll also be able to accumulate some money while you're actually going through. But the important thing is choosing the vehicle, designing your plan is very, very, very important. So this is what it is. School of a thought, Venky, at the end of the day. There is no good or not. That's what, there are so many people out there. Oh, do I need this thing? I don't think I don't need it. Yeah, this is what you wanted to see it. How do you leverage it is the big thing, not instead of saying, no, this is not good. So that's one thing, Venky, I wanted to say. I know I'm going to have one more point, and then I'm going to share my contacts here. So for those, okay, this is the one I really, really want to say. You know what? There are so many, multi-millionaires out there, because they have multi-millions of dollars, right, in their assets. But you know what? When you actually go and check them out, they have a multi-millions dollars of life insurance. Why? I don't know. I have to, reveal the secret. Do we have time, Venky?
Yeah.
Okay. So this is what. While I'm talking, I'm actually kind of share my contacts here so that people can actually see. Oops. Let's see here. How do I share? I think this one is disabled. I think you may need to give the access to me. So, you know why the multi-millionaires is going to have these things? For two reasons. The one reason, which I've already told you, all the benefits and proceedings that you're going to get is tax advantage money. They don't have to pay any income tax. Second one is, if you have a 1, 2, 3 companies, right? The company's actual businesses, and you have the $5 million of life insurance. If these companies are kind of sued, somebody sued this company, and then they have to give a $15 million. This company 1, company 2, company 3, based on the corporations. And I'm not, again, a CPA, or I'm not an accountant, right? I'm just giving a overall thought process, why people go for it.
So Chinni, sorry, we may not have time to go through that whole concept because we have to wrap the show. We're already up against the clock. So why don't we hold that thought? I don't mean to interrupt you in between, but we have to hold the thought and come back in the next show and talk more about it. Is that okay?
Sure, absolutely. I'm all for it. Like I was talking about. Yeah, I'm all for it. With respect.
So thank you very, very much. This was very eye-opening today. Honestly, this was very eye-opening. I'm sure a lot of people would have benefited from whatever you said, and the passion that you have, Chinni, in this topic is coming through the screen. It's actually literally popping out of the screen, and it's so passionate. So thank you so very much. Wish you a very happy birthday one more time, and we will see you again very soon on Sakshi TV on the Fun Factor talk show. And for those people who want to contact Chinni, you can reach out to Sakshi TV and they will share Chinni's contact information. He's based out of Dallas, and you can always look him up. We are Chinni, Chinni. Thank you so much, Chinni, for joining us today, and thanks for all your sharing all your knowledge and expertise.
Thank you, Venky. Thank you so much again. Thank you, Sakshi TV. Absolutely awesome. Happy to be here.
Thank you very much. With that, we close today's episode of the Fun Factor talk show. I am your host, Venky, taking leave. I'll see you next Friday one more time. Take care. Be safe.